Okay, cool, man. Right. Okay. Thank you very much for coming, George, and everyone else. Um, it's been a bit hit and miss my attendance here for the last month of August. It was challenging with childcare and everything. I'm going to jump right into it. So going forward, I'm going to continue doing these at this time every Tuesday. Um, I've got a lot of things that I want to talk about, so I'm going to just jump right into it. Number one thing on my priority list. I will deliver what I set out to deliver. I will compound the 15%. Um, I've had a difficult time in the last, let's say, 4 weeks, 5 weeks. Several things blew up in the portfolio. Ulster blew up, LifeMD blew up, Giga Cloud Technologies blew up, PDD blew up, Money Lion blew up. So in one short period of time, a lot of things blew up. And the irony for nearly for two at least of those names, I was holding on to substantial gains. So this has caused me to rethink, what I'm going to achieve, what lessons can I learn? And, you know, when you are going through these periods where small caps lose their momentum and there's this massive gap versus the large caps, you can't blame the market. You can only blame yourself. I don't like to kind of say, oh, whatever. I take full accountability for it. And when I recommend something for you, I firmly believe that it's going to work out. And a lot of people, not only does I understand everyone kind of subscribing, I understand the service, but beyond that, I feel like there are several members of the community, George, I don't want to kind of name somebody because I don't want to exclude anyone else, perhaps people that are less vocal, but a lot of people, I feel like have put a lot of trust in me and my work ethic and my ability to deliver for them. So, I feel that it's only justified that I return the favor and I reflect and I improve. And, there are things that are within my control and there are things that are not within my control. But what is within my control is letting you know what's happening at the moment and how I feel about the portfolio overall, and letting you know every step of the equation, what how I think about things. So the great thing about small caps is that when they hit their stride, you can make really a lot of ground in let's say 4-8 weeks. You can make a lot of ground. Like things can really just fizzle away. But there are periods where this doesn't work. So I don't know how much of this is me looking in hindsight of the last 4 weeks or last 8 weeks versus what is a repeatable strategy. But if I keep doing the things that I'm doing, I'm going to get the same results out every time. So I need to do something, right? And for me, this is something that I fundamentally believe that I will compound the 15%. And I fundamentally believe that this builds lasting wealth. So once you recognize what you are trying to do, there's no other option on the table, right? So once you know where you're trying to go, what's your North Star, it makes things a lot easier. So I will refine the strategy. Now, a few things before that. Small caps are really volatile, but I don't recommend that anyone uses stop loss. I've been through these periods so many times, man. And I want you to believe me when I say that the market isn't always the most rational thing. And sometimes certain things kind of get either overextended or unjustifiably sold off. A good example for me is AppLovin. I talked about this 2 weeks ago. I'm not going to repeat myself. I'll just say that when the earnings results came out, when it opened the stock on that next morning, it was negative 15%. And it was brutal. And people that are not very familiar with AppLovin, maybe they know Meta or whatever. Meta, similarly, when the results came out, it was like down. It was like just absolutely brutal. And 2 weeks later, with AppLovin and with Meta, things started to improve. But the gut reaction of people in the market, watching the market for an indication of what are the results and how they're going to take it, people that were taking guidance from the market are doomed to underperform the market. It's just common sense. If you're looking for the market, okay, which way shall I go? And then the market is going to say, okay, I'm going this way, and then I'm going that way. You need to stay with a different North Star. And I believe the best North Star you can have are people's expectations of what the future free cash flow of the business is. Now, that's a mouthful. I don't think that a person needs to be all rigorous and scientific about it. Just have a tiny bit of common sense, okay? Just estimate what's the run rate right now, like what's what are they doing right now versus what's possible to do next year. Some businesses like PayPal, man, I've been saying from the beginning, it's not a high growth business. And, I will, again, admitting I was way too early, way too early. If I recommended to you PayPal 4 weeks ago, I'll be like, oh, Michael's a genius. Oh, like hands in the air. But I was too early. And I think that, I'm not going to call everything right, but there are some things that I can do to slightly optimize that process. And even if I recognize something as being really, really, attractive right now, perhaps I wait until my thesis starts to play out slightly more before I kind of go, oh, you know what? This is a good investment. Just because I believe it's a good investment doesn't mean that someone else is going to believe it. So try to have a thesis in your mind. You don't need to kind of disclose it to anybody, but have a thesis in your mind and see the earning results, one earning result, next earning result come out, and say, okay, yeah, that is definitely pointing in the correct direction. So that's about stop losses that I recommend that you do not use a stop loss. And I know that the stop loss has this illusion of protecting investors, but it doesn't. It really doesn't. The stop loss guarantees that you are buying high and selling low. That's all it's doing. It's not protecting you because you're trying to accumulate wealth. Okay, you're accumulating assets, and the stop losses are saying, oh, things are shaky right now. It's out. I'm out. So I don't recommend stop losses. I do not recommend that anyone uses options. I know options that are favored for many people, particularly retail investors. And I know from experience that getting the thesis right on a stock is difficult. Getting the thesis and the timing right is a completely different ballgame. And I'm going out on a limb right now, but in my professional experience, I don't know any successful investor that has accumulated substantial wealth just doing options. They may have started wealthy and they kind of got that run rate going for them. But if you start with less means and you're trying to accumulate those means, I don't believe it. The example I've described before, and this is something that I believe in, is that imagine that you're a millionaire and you're working to preserve your million. Don't think that I'm going to go and like grow and go to the moon and all that kind of nonsense. It's really, really important that you follow that North Star of preserving your capital. Okay, so start thinking in your mind, okay, I've got to work really hard to preserve this capital. That helps for me. Other people might think it in a different way. For example, think about how much time you've had to put in to save, whether that's $100 or $500 or I don't know $1,000 or whatever. How hard have you had to put in? How many hours of work and sweat and blood have you had to put in? And that's what you're giving up when you're playing with those options. So that's on stop losses, that's on options. And I want to touch on the final aspect. What concrete aspects am I putting in to improve my strategy? So what I believe is that, there's a bit of a hindsight bias here, but if I'm not looking at my underlying results over time and working to improve them, there's no point in this, okay? So I believe that in some instances I've overstayed my welcome with the thesis. So what do I mean by that? So the thesis was working. I can name you several stocks: Palo Alto Networks, Auster, Money Lion. The thesis was working, and I overstayed. Okay, and what happened as a consequence of that is people's expectations got too high, and when the company reported, the company wasn't quite at the level that people expected, and in many instances, I was holding on to substantial gains. So that's one part of my reflection. The second part of my reflection, and this just shows the difficulty that I'm undergoing here. Often there will be instances where I recommend a stock, and let's say in 3 months or in 6 months, the thesis is starting to gain some traction, and I'm up, let's say, 40%. I concretely can point this to Money Lion, or concretely point this to Auster recently, and I've got those gains, but I've only been recommending the company for a short period of time. Many of the subscribers are kind of getting the gist of what the company does, this and that and the other, and they haven't really participated on that upside. And I felt, okay, let's stay with it. Let's kind of, another example that I can recently point to, hims and hers. I've been recommending this stock since approximately $5. It went down, and no, sorry, pardon me. I've been recommending it since $10. It went down to 5, then it's back to 10, and then like it was at 15, and then it was already at 25. So it kind of gave, I was like, holy, massive gains, massive, massive. And then it came down. Another one, Robinhood, I can say the same. I recommend this at 11 or 12. It went at one point to 24, even 25, and then it kind of came back down. So again, the thesis was right. I was right. The people's expectations got carried away. So going forward, this is the difficulty I'm trying to marry up. I'm going to do a trial period of this where I recommend something. If the thesis seems to be working, i.e. meaning that I'm already holding, let's say, 40 or 50% return since the moment that I recommend this business, I will call it a day. I'm going to try that. I know that this is going to cause some backlash. I'm kind of preempting that, because what people like to buy a stock, see it go up, and then they feel good about it. And and when I say, okay, let's just for round discussion, let's talk about Apple Oven. I recommend, it's working. People are like, oh, it's working, singing and dancing. And then I say, actually, I'm out. I'm going to recommend that you exit, trade alert, exit, exit, exit. And people are like, oh my God, what the? This is not congruent with what you're saying, and this and that. And people get all discombobulated. And you're never going to be popular. You're never going to make the right decisions for the right people. But I've got to think very, very hard about the loyal subscribers. I've got to think about what I'm trying to do for them. So again, as I said at the start of the conversation, and I'll keep repeating, I believe that I can get people to trust deep value returns if I'm transparent to them, if I treat them professionally and maturely, and I educate them what I'm trying to do. So that there's no kind of, you change direction, it's not. But I treat them with a certain amount of dignity and say, listen, this is what I'm going to do. This is a difficult decision. But when things are working out, I will exit that position. I'll say to you, listen, trade alert, this is a good time to call it today. And when things are not working, and I can see that they're not working, I'm also going to be very brutal. I'm going to say, listen, with PDD, I felt this, I'm going to recommend exit now. And this is going to annoy a lot of people, because what people don't like is a change. but I've got to be, I've got to do the work for the people that are loyal to my service, and I have to think about them, because some people have trusted me, whatever they've got, and I have to reward them, think about them. So it's a lot to take in, but this is something that is very, very important, and I'm very much aware of the challenges that lay ahead. But it's important that I deliver what I set out to. I'm gonna have to outperform. There is no other options on the table. I have to. And to do that, I'm going to have to do whatever it takes to not be lulled into inaction, but, it's really, I've got to take control of this process and improve, improve, improve. Every time that we go through these trials and tribulations, it's an opportunity, and it's a cliche, but it's an opportunity to become a better investor. And it sounds like a bit wishy-washy, but I want you to trust me. I've been through these periods. I was in 2016. I saw how things were in that period. It was like this massive gap between the small caps and the large caps. In Q4 2018, same again, like that last quarter when Trump was like, oh, tariffs in China. I saw it in February into March, April of 2020 when COVID was. Every time I've had to go through these periods, I've had to reassess how to become better, how to become better. And, I put in the work, and I put in the effort, and I put in the time, and I put in the reflection. And then I have seen over these periods that I definitely get rewarded for that. So this is a time to work hard and deliver, and not just put out a cute little narrative, but honestly deliver for you people that have stuck around with me. So I've waffled on a lot. I haven't seen some of you for some time. If you want to ask me some questions, this is a really good time. If you want to ask me some questions. Um, yeah, hi. So I got a question about hymns, and I got a question about if I could share my top 3 picks. So I'm going to take the easy one first. So I'm going to mention the top 3 picks because it's something that I'm really passionate about. So I'm going to talk about Peloton. I'm going to talk about Doximity, and I'm going to talk about POWL Industries. So with Peloton, it's something that I'm very, very excited about. I'm hoping that from today over the next 90 days, I'm going to see this share price go at $8. The thesis is very simple. It was a business that everyone thought was inundated with debt, a business that had no place in 2024 and beyond. But actually, the business is sticking around for longer than it's actually more stable than people like to believe. Now, stable does not mean a high growth business. This is really important. This is kind of not really, but I want you to think about this like with PayPal, that kind of setup. Stable is not growing rapidly. Stable, it just means that there's less bad news from time to time. Okay, so with Peloton, it's a business that everybody thought was going to implode. I thought as well, had a lot of debt, and people thought, oh, it's going to implode. But actually, their guidance, so they have a fiscal year, which is Q4 right now. So their next 12 months guidance, their fiscal year has already started. And they say that they're going to make about approximately 210 million of free cash flow. So they have some cash on their balance sheet, about 500 million of cash. They have about 1.1 billion more or less of debt. So approximately 700 millions of net debt. But if they can prove to creditors that they are able to make approximately 200 million or thereabouts of free cash flow stably, they could pay that debt back in about 3 years, more or less, give or take. So that's one part. The business is actually more stable than people believe. The second part is that they pushed back all their debt maturities until 2029. So they've got plenty of time, got 5 years to come to refinance that debt. So if you have creditors off your case and you're making some free cash flow, it becomes very, very interesting. So that's one business I'm really, really excited about. The other one is Doximity. Again, this is a bit like Peloton. You may not be very familiar with Doximity. The ticket is Docs, DOCS, Doximity. Again, stable business. It was a business that kind of everyone was very excited about. Kind of quote unquote like LinkedIn for doctors. It's kind of a like how to describe it. It's like an ecosystem really where physicians keep all their details on there, and then the pharmaceutical companies can find out, okay, actually this is the person in that department that I need to reach out to find out if I can sell on my drugs. So the pharmaceutical companies are willing to pay Doximity for a subscription to the platform, whereas the physicians are kind of like, okay, it's like a LinkedIn kind of for them. So it's kind of a two-way system. It makes a very high amount of free cash flow. So this is a business that I think, okay, if they can prove to people that they can grow at approximately, let's say, 8-10%, everyone is kind of pricing them for death. So it's something that I'm really, really excited about. And the other one is POWL Industries, which the ticker is POWL. And this is something I just wrote about today. I very much like this business. A lot of people think that it's something like Supermicro. It has nothing to do with Supermicro AI or nothing like that. It's a business that essentially has 18-20% of net cash position. They have no debt on their balance sheet. The hiccup here is that they have their bookings that they take, revenues that will be recognized over time. Their booking figure, this is like a leading indicator, has been stable for about 3 consecutive quarters. So they're growing really fast right now. The revenues that they're recognizing are really, really fast. But the problem here is that the booking figure is stagnant. So people are saying, you're recognizing a lot of revenue right now, and you have a lot of work to be recognized over the next, let's say, 12 months, but are your revenues going to fizzle out? Because you're growing at 50% right now, and we think that it's going to just totally fizzle out. So next year is growing at, let's say, 9% or even 10%. So it's a massive slowdown. So if there's a slowdown, the multiple will compress. My contention is that it's quite a seasonal business. So you just need, one good quarter where you take a lot of bookings up front and you recognize that work over time, and it dispels a lot of this aspect of it's just a seasonal business. So this is something that I'm very excited about. Those three are POWL, POWL. I'm excited about Doximity and Peloton. About HIMS, I've been a big fan of HIMS for a long time. I think it's actually 3 years now, 3 years that I've been following this company. And I understand why people don't like them. People don't like it because their core business, which is essentially like hair products and the erectile dysfunction drugs, that's their core business, their bread and butter. People believe that, there's a high churn level. So you have a lot of subscribers coming in, they take your drugs, and then after, let's say, 4 or 5 months, they unsubscribe from your platform and never to be seen again. So you have a high customer acquisition cost. And then after some time, the customers, subscribers churn out. But that's the narrative, okay? And then on top of this, you have this question mark on whether or not the weight loss drugs, the GLP-1s, will or will not be able to generate a lot of profit. So there are two different parts here. I don't believe the market is giving any value to the GLP-1 side of the business, the weight loss business. So, at this point in time, like, this is no here nor there. If it happens, great. As a matter of fact, I just saw this morning news from Eli Lilly saying that actually the shortage of GLP-1 drugs continues for another 3 months. So even if that doesn't transpire to be the premium that some investors had hoped for, and it becomes highly commoditized doesn't mean you don't make any money. commoditized means that nobody gets a premium out of it. And the best example I think about is oil. Oil doesn't mean that just because everyone can make oil doesn't mean that you can't make a lot of money from oil. Okay, it's just that you go for a boom and bust. But as it stands right now with hims and hers, nobody's really giving a lot of value for that whole weight loss aspect. So I think that that's upside if it comes, but the underlying business itself, which at the moment is just targeted at hims, they're trying to get up to speed with the hers side of the equation. And I actually just saw before coming on the call that on the Apple Store website, the rankings for the hers business was around 16 on the top healthcare apps downloaded in the last, I think it's last month or whatever. So they're definitely gaining some traction to the her side of the business, but at this moment in time, it's just trying to get some subscribers in the door. So there's not a lot of revenue coming here, but doesn't mean there's not going to be some revenue coming, in the next, let's say, 6 months or even 12 months. And it's in the company name, hims and hers. It's part of the vision of the CEO. And that's another problem. A lot of the people say, oh, the CEO has comments about Palestine and stuff like that. And this is just, this is just noise. And I feel that people kind of carry the noise. Let me just mute.
I mean, that's not, I mean,
people just talking. 1 second. Someone's talking. 1 second. Yeah, it's fine. People kind of get the narratives carried away depending on what the share price is doing. And when the share price is down, people kind of, a lot of negative news surfaces. But it's difficult to believe, but this type of negative sentiment is like a pendulum, and it's really difficult to believe, but a pendulum swings and it doesn't last. Even if it feels like, oh, it's been like 2 months and it's been like so negative, it will be like a flash in the pan those 2 months if you extrapolate over into next year, and it will swing back. Yeah, so that's what I wanted to talk about with hims and hers. Does anyone else have any other questions they want to kind of ask?
You think GitLab will come back?
Tonight is the earnings, so we'll have to see. I'm not optimistic. I'm not optimistic. I made an estimate that they would be more profitable than they turned out to be. Obviously tonight's the earnings are, you'll see how it goes with their guidance, and they kind of like halfway through the year, so they won't meaningfully change their guidance about next year, but for all intents and purposes, I've got it down to a hold, and unless I'm totally blown away, I am going to call it a day on that one tomorrow. I feel like it's difficult, and I wish that I don't know, like, I believed that they were going to get closer to, let's say, 4% profitability margin, and I feel like they're kind of far from that still. And I wish that, I don't know, it's difficult, because you make an assumption of what the business's prospects are, and you extrapolate it forward. And then I don't want to blame anyone, but that's the same thing that happened with PDD. You kind of extrapolate what it could be, and then management says, actually, we're not growing quite at the rate we want it to be. We need to reinvest back in our operations, and you take back a lot of the profits to reinvest in the business. And the market hates that. The market hates it. So it goes from everyone is super excited and buying into a narrative to everyone goes to, oh, this is now a show me business. You need to prove to me that you can reach this kind of targets, and the market becomes very skeptical. And this goes across the board. There's even something like CrowdStrike, that goes from everyone like is like the poster child for cybersecurity, and these things just fizzle. And yeah, that's the game we're in. The game that we're in is we make some assumptions about what the business could do, and sometimes those assumptions don't play out. It's always an odds game, and you try your best to invest in a business where you believe expectations are relatively muted relative to where you see them going, and it's an odds game. And the truth is that too often the bulk of your portfolio will just be an average performance. The bulk. You have a few junk stocks and some that really carry the day. Like in 2023, Money Lion really did really well for me. And this was something that was recommended to me, Money Lion. And I make a very large habit of refusing 99% of the stocks that are come my way. Like you've been recommending Zim to me like since $12. And if I just listen to you, it'll be like a massive home run. But I'm a stubborn person. I'm highly competitive, and I go with my vision, for better or worse. But the other side of the equation is that I work really hard on myself when I've made a mistake, and I don't take it lightly. So just to summarize this question about GitLab, again, what I spoke about at the start, if something is not a clear-cut buy, I'm going to exit out of the portfolio. It's time to regroup and time to deliver what I set out to do.
Okay, thank you, Michael.
Thank you. Thank you for your question. Does anyone else have any question? Got a couple more minutes on the call. Does anyone else want to ask any questions? Just 1 second, just reading the question. Yeah, so I mean, with Peloton, I'm really hoping that this will turn out to be a terrific call for me. What I would like to believe, we'll have to see, it's on the call here, everyone will be able to see and judge in time. What I would like to believe I'm quite good at is understanding where people's expectations are relative to where they could be. This is what I would say is my bread and butter. And I'm really hoping that I got this one right, and Peloton will be $8 by the time next quarter comes around. Yeah, this is something that, and I'm hoping that when it does come to $8, I will not, just, people are buying into it, like my thesis was right. I will be much quicker to say, okay, that's it, time up, let's go. I very much like the thesis here. It's a business that it's kind of in my mind, sorry, I keep repeating, it's not the same, but I keep thinking like PayPal, because it's like that kind of idea where new management comes in. And what I like about these businesses where the share price is down significantly and new management comes in is there's a sinking boat. New management comes in and they're forced to put in place some sort of action. Okay, they got like a certain time with the board, the contract. They need to really deliver in that first year, and if they don't, they're out. Like, and a good example here is Snowflake. When Frank Slootman came in, it's like, you got to do something, right? Some change is coming, and people will be more than happy for you to throw the kitchen sink and cut out this, cut out that, restructure this, do something, and the time is ticking. And I like these type of setups. Sometimes they don't work, but when the expectations are relatively low, that's generally a good setup for me. And I like this type of thing. I don't have a stop loss on it. I'm really, what I'm looking for is when their next quarter results come out, do they reach 50 million of EBITDA? And if they do, then my thesis is working. We're hunky-dory, we're good. And if they don't hit a 50 million, then, all bets are off. And this is something that I'm hoping will come back and say, you know what, I call it right. I'm really, really passionate about this investment. Really, really feel that this is good because everyone thought that Peloton was dead in the water, too much debt. But people will come to understand actually the debt is not such a big issue, and they're actually going to be more profitable than people expect. And what is the good thing here is that the market is always looking ahead. So you don't actually need all those profits to come in. It's just people to buy into the new idea. So yeah, I'm really hopeful that this is something that will come back and say, okay, I did well there. Yeah, and that's it. Thank you so much for coming, George, and everyone else. Thank you for the questions, Minwoo. And I'm really excited to be back into the road of things. Next Tuesday, I'm going to be here. And I'm really hoping that, we'll put in place some work to deliver some outperformance. And yeah, I know I just kind of briefly mention I was really excited because I got up early on yesterday. Monday was in the US, it was bank holiday, and I worked hard on Gig Cloud Technologies. I really put in a lot of effort there, and I was like just fielding questions, and everyone's like, "Oh, it's Chinese, therefore equal fraud." And I was like no, like it's not a fraud. It's not a fraud. And I was like, you can make so much stuff up. You can make a little narrative, say that we're gonna have robo taxis by 2020. You can make whatever story you want to come up with, but cash is cash. You can fake a lot of things for the auditor, but the auditor will kind of figure out, even if they're quote unquote a Chinese auditor, cash is the number one thing. It's not too complicated. You get little receipts from the banks. You see what the cash is, and I was like, okay, the business has so much cash, and it doesn't tally up with it being a fraud. Fraudulent companies don't have cash. They have a lot of debt. And I was like, yeah, I'm good on this. And it turns out that I don't know if management read my piece or whatever, but Tuesday morning, they're like, okay, we're going to buy back 40 million worth of stock. This is 5% of its market cap. And I'm like, jackpot. I was like, yes, knocked it out of the park. Let's go, baby. Yeah, so that's that. And I hope to see everybody next Tuesday. Thank you so much for your time. Thank you.
Okay.
Thank you so much.
Thank you.